Now, what happens if we have a flag that turns into a steep retracement, or where the flag itself is so steep we would have to absorb too much risk by trading it as a normal flag pattern? What we do is we would take half the profits of the 382 extension of the retracement itself. Now let me show you what I mean by that. Here's our thrusting action, and there's our steep flag, if you like. So we've got a 2-point flag on, say, not a very high price stock, and that's a steep retracement to say we're looking at. What we do is, rather than measure the flagpole itself, let's measure the steep retracement, which in this case is 2. Now, as the stock price rises through our entry point, which is the yellow line, we then set that profit target to 382 of that number 2, which would mean 0.75. So the stock price rises, it goes through our entry point, and then hits, hopefully, our profit target. Now, what we're finding is this happens a lot of the time. And again, it's a conservative profit target, considering where we've actually entered the trade, but it seems to hit over and over again. And of course, we can have the same thing with a bearish move. So let's just say that we've got a move that's gone down, a thrusting move that's gone down, and then we've had this steep retracement. It might have been a rounded bottom. Remember, we can have rounded tops for bull flags, which then make steep retracements down before then moving back up again. We can have a rounded bottom here. So this could have started off here in the bear flag situation as a bear flag that formed a rounded bottom, a steep retracement, and then it starts to move back down again. And in this particular case, what we'd have planned is an entry point just below the low of the big move, and we'd have our profit target set at 382 of the retracement. So not the flagpole, but the retracement, and that would be at, again, 75 cents below that. And what we'd hope for is that the stock goes through our entry point and then hits our profit target. And what we're finding is this happens a lot of the time. It's a very high probability trade, particularly if the OVI is also in your favor. And the good thing about these steep retracements is that they don't happen just literally in a day. The stock doesn't reverse and start going in your favor in a day or so. And you've usually got a few days of warm-up to see that the stock has finished retracing and starts then moving back in line with the dominant trend. And if the OVI has changed direction there as well, you really get great opportunities of profits. And don't forget, our first profit target is fairly conservative, so we've got huge opportunities to make good profits, and often these things will keep on going as well. So that means we get our windfall profit as well. Let's have a look at an example here. This actually is of Google. And what we can see here is a number of steep retracements. Here's one. And did it hit the first profit target? Well, you can see easily just by your eye, it did hit the first profit target after you enter the trade at above 475. So P1 is easily hit there. We've got another one here. Was that easily hit in terms of the first profit target? Absolutely. Very, very clearly, easily hit there. And you've got another one up here. Steep retracement, and then followed by an upward move where P1, or our first profit target, which is a 382 extension of the retracement move, is hit. Now what you may notice is that with each steep retracement that we've got here, it's been preceded by a bull flag that's failed and turned into a rounded top, and therefore it's given us the steep retracement, and then it's had a run up before then breaking into new highs. And each time the OVI was also in favor of a bullish move, which is great. Here we've got another one here, a bull flag right at the top there, and even that one, if you took the amount of that flag itself, that consolidation itself, even if you took that and then made a profit target for that, even that was hit. Just taking that retracement itself, the actual body of the flag, even that, if you extended it upwards, was hit and made its own profit target as well, right at the top there. Let's have a look at another one. This is Apple, another heavily traded stock. Let's look at some steep retracements with this one. Well, here's the big steep retracement that you can see here. It almost reaches 210, about 208, $209. It retraces all the way back down to under 190. And if you were to take that as a retracement, even that is hit. Let's just go through the maths here. The range was $208 down to 188.68. That gives you a range of 1932. And our P1 target, our first profit target, would be 208 plus that 1932 multiplied by 0.382, and what that gives you is a figure of 7.38, which also means that your target, your profit one target, is 215.38. Now, in reality, you would lower that even more. You would say make it 214.84 or something like that. No need to be too greedy here. You don't actually have to make the full 0.382 extension. But just to show you how well this works, what's happened here is that the 382 extension is actually hit by a doji bar, which you can see right at the top there, that little green doji bar, about 4 bars from the end or 5 bars from the end. And you can see that that doji bar made a high of 215.59, which is 21 cents above our profit target. So you see how these things work so often, even with big steep retracements, they work. And you don't need to make your first profit target even at the 382. You can make it, say, at a third, 0.33, or even 0.3. Be conservative, get used to taking profit targets when they're on offer, because the biggest losses are made when people don't take their initial profits and they get too greedy. So always err on the side of caution. So that's it on how to manage your flags and how to enter them, how to put your stop losses in, and how to manage your profits, which is so important. We're now going to look at money management and how much money we should be allocating to any single trade.